This is a slightly interesting beast. It's the NewFunds Equity Momentum ETF. Now, the NewFunds thing, as far as I can remember, is part of the Barclays Africa ABSA group. It's a specific group that has some interesting technology which it uses, and this one is about momentum. So in other words, these are stocks that have recently displayed some upside share price momentum.
Indeed.
So that's going to mean that it's got a lot of mining shares in it.
Interestingly enough, not. And I'll tell you why it doesn't. So let's just quickly look at how that index is constructed, or maybe first why this is now something different than the past. Because ABSA, you're right, it was Barclays ABSA. With the unbundling or the selling off of the ABSA stake, the original momentum index was actually calculated by Barclays. So ABSA had to find a new index for this particular ETF. They have now, in conjunction with the WITS Department of Finance, devised a new momentum index, which looks very different.
What the hell
what
is
are
that?
they doing? This is the Department of Finance, and therefore it is a. And what is very unique about this one is absolutely it is, and therefore really taking cognizance of South African sort of interesting fundamentals in terms of it. So yes, you pick the top 20 price momentum stocks
out of a universe of how many?
Of the top 100 stocks. So you're starting with quite a good universe there, but then you reduce it to say
the bottom of the barrel.
But I think the key difference for me in this one, and why I really like it, is the fact that when they've selected the top 20 momentum stocks, they don't just go and put them in at market cap weight. They don't go and just put them in on some basis of a momentum factor. What they do is they equally risk weighted. Now what that means, each individual stock must add an equal amount of risk, as in portfolio or price volatility, to the overall portfolio. And that's why you don't have a big weight in terms of mining companies, because you can have, say, just 2 mining companies, but they might be double as volatile as, say,
so what you're
a British
saying
American
is if they're
tobacco.
Extremely volatile, their chances are will get muted a little bit. If they've been fairly good price performance but not too volatile, then they'll get a slightly higher
and not
weighting.
just not too volatile, but not too similar to the other shares that are in there. So this is in the context of the 20 shares. It is quite complicated, so one needs to look at what they're trying to capture in there.
And how is it done historically?
So it's difficult to look at don't look at the ETF history, because this only changed in September. So you need to look at the history of the index.
Wasn't the old Barclays index fairly similar?
No, it was a very different one. It was not just selected on the basis of momentum, it was weighted on the basis of momentum as well. So you ended up with quite big risk concentration, and where the real benefit of this new risk, equally weighted risk momentum index comes in is in its drawdown. By actually reducing the concentration of that risk, your drawdown is a lot less, because a momentum index does great
when you have, something that does very well, but when the market falls, it might go down by 20 or 30%.
Exactly. So it's almost that gearing on the upside, but at the same time also full participation. And with this one, you don't find that. And I think that's why it interests me, it attracts me, because it captures the price momentum on the upside, but its downside or its drawdown risk is a lot more muted.
Okay, but I do just have one question. Is to some extent when you buy something like this, you're sort of trusting the people at WITS and the people at NewFunds and ABSA that they're going to just carry on with their system, and if it needs tweaking, it's going to get tweaked. So it's a bit of a black box type thing. But what you're saying is, based on your experience, you like the way this thing's been constructed. Have indices like this or products like this done well globally?
Yes, they have, absolutely. This is one of those so-called smart beta type ETFs. And when you talk about a black box, yes, absolutely, it's not up to the investor to try and understand the maths that sits behind something like this. But it's a lot less of a black box than buying a unit trust, where you actually just trust the fund manager and you've got nothing other than the past performance to go on. The transparency of this black box means that on a daily basis you can actually see what is inside that fund, and therefore get a sense of it.
You could actually go to the fund listings on the internet and do a detailed read, and then go and try and find academic papers perhaps submitted by some of the people at WITS that have
and not just WITS, but certainly global research. Absolutely. So for me, and I can just tell viewers that where we are at the moment, British American tobacco is actually the biggest weight in this in this particular index at 12%. It's the only one in double digits.
That share price just came down quite sharply in recent days because of the Reynolds American deal. So then what you're saying is that might result in a readjustment.
So also the other thing to bear in mind is, because it's momentum, they actually review this every month. And with that, what they also do, interestingly enough, they exclude the most recent month. We're getting very technical on this, and I don't think it's really important. But there's a lot of academic research that supports the methodology behind this, and I think certainly one to look out for. And the reason why I'm hot on this one, why I like this, is that one of the hardest things for investors to do, it's still relatively easy to get your timing right, of pulling out of the market and avoiding the drawdown. It's much harder getting back in after you made that call correctly the first time round. An index like this is unemotional. It does take you through some of the dip of a drawdown, but it puts you back into the momentum on the upside.
In it once you're in it. Don't try to then add to that your own amateur version of in and out.
Exactly. So that is one where you can capture both the upside of the momentum with limited downside without tinkering on it, without actively going and trading in and out of it.
Okay, good. Right, so we're hot on that one.